Hello everyone. Welcome to today's session on Budget Finance Bill 2023. It's basically a short series organized by Team KACA. So let us welcome today's session speaker CA Abhishek Murthy R, who will be conducting session on section 115 BAC, new defaults tax regime and other taxes and rates. To brief up a short introduction on CA Abhishek Murthy, he is a fellow member of ICAI and holds a bachelor degree in law as well as commerce, and he has also completed certificate course on TP. He has more than 9 years of experience in advising and assisting clients in various areas like personal taxation, audit, corporate taxation, international transactions, transfer pricing, and litigation. He completed his articleship from Sundaresh and Co. Chartered Accountant, and currently he is having his own practice at Abhishek Murthy and Co. Abhishek carries extensive experience in tax and financial services. He is also a regular faculty at various teaching institute and inspiring next generation of chartered accountants. A warm welcome to you, sir. And on behalf of Team KSCA and all the participants, we will welcome to you again. And over to you, sir.
Yeah, thank you, ma'am. Yeah. So in this short session, we have five aspects to cover mainly. One is the tax rates for this assessment year, coming assessment year, whether any change is there or not. We'll just check that, and we will go into 115 BAC, which is a newly introduced tax rate. It's not newly introduced, but there are certain changes to the tax rate as compared to the earlier assessment years, and the changes to surcharge and the changes to rebate with respect to this section. We also see 115 BAE, that is with respect to cooperative societies, right? So let's quickly dwell into this one. So current year for assessment year 23-24, there is no change with respect to the rate of taxes. So whatever was proposed in the earlier Finance Act still remains good. When it comes to 115 BAC, there is a change in the way the tax rates currently are working. So in line with in line with the objective of the government, wherein they want to remove all the exemptions and then go with a flat rate of taxation in order to simplify and expand the tax base. 115 BAC amendment is a step towards this action. So what are the main things here? One is for assessment year 24-25, it is applicable. Point number one. Point number two is earlier 150 BAC was eligible for individual and HUF. Now it has been expanded. It has been the number of assessees which can be covered under 115 BAC has been expanded to cover one AOP, and exception to this AOP is cooperative societies. They're not anymore. They're not covered here. Body of individuals, whether incorporated or not, and artificial juridical person. Okay, so joint ventures, etc., trust, everything will get covered under these provisions now. Right now, in terms of the rate of taxes, what is the change? So government has taken an approach of simplification, where earlier there were 7 slabs. Now it has been reduced to 6 slabs, and also the gap between each slab also has been widened in order to make sure that it is advantageous, or you have an arbitrage benefit as compared to the old scheme. Some tax rates have been taken away, 25%, etc., which was there. That has been done away with. Now, instead of 25%, directly 30% slab is coming into picture. So as compared to the old regime, 10 lakh and above is 30% slab, but in 115 BAC, it is 15 lakhs and above is the new slab which you're going to have. This 115 BAC is applicable for both residents as well as non-residents. In addition to individual and Hindu and different being covered, now it applies to a wide variety of assessees. And unlike the earlier section where it was an opt-in mechanism, now here it is a default mechanism and you need to opt out of it. That is the main change we are having with respect to 115 BAC. So by default, you are going to have 115 BAC being selected. And if you don't want to get selected under this, you have to opt out of 115 BAC, right? So that is something which every assessee needs to keep in mind. Similar to 115 BAC, which was there earlier, when you compute in the total income, various exemptions, various deductions, they are restricted under 115 BAC. The list of restrictions on the deductions as well as exemptions remain same, but in as compared to the earlier section, there are certain allowable deductions which are allowed now. One is standard deduction under salary, that is 50,000 rupees standard deduction. Family pension deduction, that is 33%, one third, or 15,000. And also amount deposited into Agnivir Corpus Fund. So these are the three additional benefits which have been extended to 115 BSc, right? But apart from that, everything else, whatever was the earlier restriction on deduction, like additional depreciation or contribution for scientific expenditure, contribution to scientific association, sorry. So all these, whatever were their earlier restrictions, they still continue the same under the new regime also, but we have three more additional benefits which are extended. Okay. The law now says that by default, you go under 115 BAC. And in case you want to opt out, you need to specifically subscribe to it. Okay. The subscription will be on a similar line as compared to last time, wherein we were filing Form 10 IE. So same thing has to be done even under 115 BSc also. Okay. Currently, mainly for the purpose of tax reduction at source for salaries and various other individuals, this is going to have an impact. So we need to make sure that for financial year 23-24, we need to specifically request whether they want to get covered under the old regime or new regime, and then proceed ahead with the selection. Okay, so that's point number one. Next is, how do you select an option? How do you select an option to opt out? So now by default, you are coming under 115 BSc. Now you need to opt out of it. Now the opting out also has been bifurcated into two parts. One is if you have PGBP and if you don't have PGBP. Okay. Now the main reason why that difference is there is because your depreciation calculation, etc. So your additional depreciation calculation, your open in WDV, etc. And since it undergoes a lot of modification, so because of that reason, you need the way government has now brought the law is they've bifurcated the opting out into two parts. How do you opt out? If you're having business income, if you're having income from PGBP, then you need to opt out from the default scheme. You need to opt out of the default scheme by intimating to government, before the due date specified under 139(1). Okay. Now, this may be a tax audit case. It may not be a tax audit case. So all the permutation combination still works out. What we need to remember here is the option to opt out has to be intimated, not the return filing. Okay. Now, once you have selected an option to opt out from 115 BSc, this will remain valid for subsequent years also. This will remain valid for the subsequent years also. You are allowed to come back only once into 115 BSc. Okay, we'll see that again. If you don't have PGBP income, right? If you don't have PGBP income, then along with the return of income, you need to opt out. Along with the return of income, you need to opt out of 115 BSE. And that return of income cannot be any return. It has to be written under 139(1). So you have to be careful with respect to belated returns, etc. So you need to keep that in mind. So the opt-out has to happen along with the return of income. Okay, so that is also one of the important aspects which you need to understand under 115 BSE. Now, can you get back to the default scheme? That is 115 BSE. So as we discussed, if you are having PGBP income, you can opt out, and then in the next previous year, you can come back to 115 BSE. But that is a one-time opportunity, only one-time opportunity. So let's say financially, as a previous year, 23-24, you opt out. For the whole 23-24, you cannot again come back. So you don't, within the same assessment year, you cannot keep changing it. That's point number one. Once you opt out in the for that previous year, in the next previous year, you can come back. That is 24-25, you can come back to 115 BSE. Once you come back, you cannot again go back to the regular. You cannot again go back to the regular scheme, right? So only one time you have an option to come back to 115 BSE. But if you do not have PGBP, if you are a person who does not have PGBP income, then every assessment year or every previous year, you have an option to opt in or opt out. Okay, so that option is available to you. But once you choose for a particular previous year, that selection has to remain constant for the whole previous year. Right. That is with respect to how do you get back into the default scheme, or how do you get out of the default scheme. Next, surcharge. So earlier we had four surcharge schemes, surcharge rates. One was 10, 15, 25, and 37%. So we had these four different surcharge rates. Now, in order to make 115 BSE more attractive, what government has thought is only if you're going for 115 BSE, then the surcharge rate, the highest surcharge rate has been restricted to 25%. Okay, so the 37% surcharge rate we do not have. So only if you're coming under 115 BSE, then the surcharge is going to be levied in the following manner. 50 to 1 crore, it is 10%. 1 crore to 2 crores, 15%. 2 crores to 5 crores, 25%. 5 crore to 10 crore, it is still 25%. And 10 crore and above, it is still 25%. So this is the major change which you are going to have with respect to this 115 BSE. Now, what is the result of this? The result here is a person having income which is, let's say, 7 lakh to 15 to 20 lakhs, in that range. A person having income beyond 2 crores. So both of these people by default have benefit under 115 BSE because of the rate of taxes under both for these assessees, right? Any person who's going to have in between these things, he might have to verify whether 115 BSE is beneficial to him, or the earlier old tax regime is beneficial to him or not. So he needs to weigh them. But in order to make 115 BSE more attractive, government has done away with the 37% surcharge scheme, right? So the enhanced surcharge is now going to be 25%. Okay, that is going to be the highest surcharge rate. With respect to 111A, 112A, dividend income, 112, 111, 115 AD. So with respect to these income, the maximum surcharge has been limited to 15%. The maximum surcharge has been limited to 15%. This is not a change, but this is the existing regime. This the surcharge with respect to AOP also has not undergone change. So if surcharge with respect to AOP, where all the members are company, that is also have been capped to 15%. That also has been capped to 15%. Marginal relief also is available in case of surcharge. Next, let's come back to rebate. So under 87, 87A, we have rebate. So up to earlier, what the regime was, up to 5 lakh rupees, no one had to pay tax because of the rebate provided under 87A. Now the 5 lakh rupee limit remains the same, but that is now applicable for the old regime. For if you are covered under 115 BAC, then the rebate, the amount has increased to 7 lakhs. So up to 7 lakh rupees, okay, any tax payable on the total income up to 7 lakh rupees, you have rebate under section 87. Okay, this is applicable only for a resident individual. It's not applicable for any other assessees. This is also one of the benefits we have under 115 BAC. So if you opt in for 115, or if you remain under 115 BAC, to be correct, then you will get the benefit under 87A to the extent of 7 lakh rupees. So with respect to this, let's see a couple of examples. So let's say you have 7 lakhs under the old regime, you are liable to pay 54,600 as a tax, but under the new regime, you don't have to pay anything because you have 87A relief. The difference is going to be 54,600. Let's say you have income up to 40 lakhs. Let's say you don't have any deductions, then the tax payable, the difference is going to be 1,17,000. So under the old regime, 1053 you have to pay tax. Under the new regime, 936 you have to pay the tax. If you have deductions, let's assume you have deductions like HRA, LTA, and family pension, etc. Then how does the old regime and new regime work? So the tax payable under the old regime comes to 2.34 lakhs, and the new regime comes to 2.80 lakhs. So you can see that if you are having deductions, then you are required to verify whether the old regime is better or continuing with the default regime is better. That option you need to exercise by verifying what deductions you have and what benefits you are going to get. Okay, let's assume you have 6 crores. Then because of the reduced surcharge rate, what happens is the tax liability also reduces. So let's say you have 6 crores of this one, then the tax liability is going to be 2.52 lakhs. And in case of 115 BAC, you will have 2.52 crores as a tax liability and 2.30 crores as the tax liability. So there's going to be substantial difference in the rate of the amount of tax you're going to pay because of the reduced surcharge. So to sum it up, what is the difference between the default tax rate and the old tax regime is one. If for a person who is having lesser tax, who is having lesser income, and a person who is having higher income, higher total income, okay, for both of these extremities, the 115 BSU option is going to be much more beneficial. Who is any tax payer who's going to fall in between the lowest end of the tax bracket or the highest end of the tax bracket, they have to verify whether they have tax deductions, and after considering tax deduction, whether it is beneficial to them to continue with the default tax regime or to go back to the old tax regime. They need to make that choice depending on their deductions and exemptions which they are going to claim. Right? Apart from this, we have one more new section which is inserted. That is with respect to cooperative societies. So if you're a cooperative society, in order to make cooperative society in line with companies, the tax regime in line with companies, the new proposal is 115 BAE, which comes in from finance previous year 13, 14, 23, 24. It says that any person, any cooperative societies which is engaged in manufacturing and production will have a concessional tax rate of 15% and surcharge at the rate of 10%. So that's a new tax rate which has been introduced. So apart from this, there are all the other existing tax rates remain the same, and there's no change with respect to the existing tax rates. So in terms of practical implication, what is going to happen is, so from 1st of April, so mainly for salaried employees, we need to start collecting information from the employees. We need to understand whether they want to still remain under default regime, or they want to go to the old regime. We need to verify, we need to collect information from them, and based on that we need to make the choices. We had a circular from income tax department with respect to how to implement 115 BAC in the earlier year. So the same circular still holds good under even under 115 BAC also, with respect to the practical implication on how the section works. For example, can an employee choose 115 BAC under the tax when he goes informs the employer, and at the time of filing return of income, can he go back to the old tax regime? The answer is yes, you can do it. It was the same which was given. The answer was given through a circular earlier. The same circular still holds good even under new 115 BAC also. So the circular is going to clarify a lot of practical implication on how this 115 BAC works. So that is going to be with respect to the new tax changes under the Finance Bill 2023. Okay. So any questions? You can put it in the Q&A box. So
Yes, sir. We have one question in a Q&A box. I'll just read it for your convenience. Whether 87A is having any tax relief exemption limit, like in old regime, it's given as 12,500, or whole of the tax is exempt in new regime up to 7 lakhs or up to 2 lakh 50 tax.
So up to 7 lakhs of total income, whatever the tax payable comes into picture, on that tax payable, you will have relief under 87A.
We have another question. Opted for new regime with the employer while declaring for the proof and all, and can I change this to old regime while filing the return of income?
Yeah, so at the time of return of filing is what is important. So you may have opted on with the employer, and uh, you may have opted with the employer, but with respect to at the time of filing of, you can change it to the you can go back to the old regime. That is up to you. The SSC has an option. Also, one more thing you need to note here is, in case employee doesn't respond to your queries with respect to whether he what is his choice, then you have to continue with the 115 BAC. You don't have any option to go back.
From macroeconomic perspective, is the move from old regime to new regime a move in the right direction?
I would say yes. One is it reduces complications with respect to the surcharge rate. So that is one aspect. The second aspect is you have so whoever doesn't have any tax saving deductions or exemptions, who don't choose these things, they will have a reduced tax rate. And because of the reduced taxes, the compliance and the uh, what do you say, the voluntary compliance is going to increase. So it is a move in the right direction. People also will have more spendable income, so that is also another uh, views which the government is thinking. And also government also understood that because of giving such reduced tax rate, it's going to result in loss of revenue for the government. So they're going to cover it up in other they are going to cover it up through the increase in the tax base rather than the what do you say, increase in the rate of tax.
How many times a person having business income can opt back to the new regime?
Only one time. So he can only opt back to the he can only, so by default you have 115 BSE by default, and you can go to the old regime, and only once you can come back to the 115 BSE, only once. And after that you have to stay with 115 BSE ever after.
One more, few more are there. I'll just read out. I have business income in year one, changed to old regime. In year two, I came back to new regime. Now I cannot go to old regime if I have business income. However, in year three, if I do not have business income, is switch is possible.
Yeah, so the law has understood it, and they have in the amendment they have considered it. They're saying that, so you have business income by default 115 BSE. You don't want 115 BSE, you went back to old regime. In the next year, you still have a business income and you want to come back to 115 BSE. Okay, let's assume you came back. And after that, the third year, you don't have business income. Then in that year, you fall under the regular category. And once you fall under the regular category, every year you can switch in or switch out at the time of return filing under 139(1).
For assessment year 24-25, if I only have short-term capital gain under section 111A of rupees 7 lakhs and I opt for the new scheme, what is the rebate I'll get?
So you don't have the benefit of basic exemption limit. So without considering the exemption of basic exemption limit, you have to go for the uh, tax rate. So once you go for the tax rate, your benefit under 80, your 87A also will not be given to you.
What if a business assessee opt for old regime in 1 year, but in a year two, without opting out, pays taxes under new tax regime? How would such an assessee's income be computed by the department?
Okay. What if a business assessee opts for old regime in year one, but in year two, without opting, pays tax under the new regime? Okay. And how would assessee income be computed by department? So technically, once you opt out, by default, you're always under this one. So your return, you cannot file under a new regime. That the return itself will not enable you to do it, because the rate of taxes is freezed, because you have already chosen an option to opt out. So you technically cannot file return by going with this one. So I don't think so. It's going to be a practical challenge, because the return itself is not going to allow you to do it.
Okay. What about proof submission? In default regime, no proof need to be submitted. However, if old regime is selected at the time of filing of ITR, then what compliance is required?
So once you go for a default regime, you don't have any deductions or anything. So because you don't have any deductions, and the only deduction you have is for 50,000 standard deduction, so which you never required any sort of this one. So I don't think so it should be an issue.
Salaried employee has a choice every year to choose between old and new. What if it has F and O loss, future and option loss, and does not report it so that he can have choice of old tax regime, opting tax regimes? Basically, is it mandatory to report losses, or can we take chances of not reporting so that we can have the choice of opting tax regimes?
Yeah. So with respect to F&O, since it's in the nature of business or profession, now by your business, this one wait, business loss is on par with business income. So I don't think so. You have an option not to report it, because if you don't report it, what happens is there are various trigger points to not reporting it. It will trigger what do you say, your AS state, differences between AS, TIS, and all those differences will come. So it's technically a non-disclosure. So I would not, I don't think so that you have an option not to report. You have to report, and by reporting it, technically you will not be able to make that shift in case.
Um, Filed assessment year 22-23 old scheme, now under default provision of section 115 BAC. Does it amount to one-time change option opted?
No, it doesn't amount. So by default, it is 115 BAC. From the 115 BAC, you have to come back to the old scheme. So that is the change which you need to, that is the one-time change. Whatever you have done earlier is not the one-time change under the new 115 BAC.
I have only exempt income from partnership firm. Am I a business assessee or non-business assessee for the purpose of section 115 BAC?
You have income only from,
Partnership firm.
okay, your income only from partnership firm.
Partnership firm, yes.
Okay,
And for section 115 BAC, whether I become a business assessee or a non-business assessee.
yeah. So you will become a business assessee for 115 BAC because it's income from your income from partnership firm will be treated on par with PGBP. I'm not able to hear you, ma'am.
Sorry. Is surcharge on capital gain restricted to 15% and 25% is not applicable?
Yes, that it was there earlier. So on 111A, 112, 112A, dividend income and 115 AD. So on all these income sources, it was limited to 15%, the maximum surcharge. That is still going to remain the same.
Can I file my return in new tax regime and then revise my return after due date paying taxes under old tax regime?
So revision of tax returns are mainly going to replace the original tax returns what you have filed. So whatever is the option you selected under the original tax return is going to remain same in the new tax regime.
What about ATP deduction in section 115 BAE? Are they still applicable?
Yeah, this ATP is mainly there for your cooperative societies which are having income from the members, right? So with respect to those, they still do continue even under 115 BAE.
Okay. What happens to the new tax regime we have opted for earlier years and shifted back to the old regime now? Do we still have a choice to opt for new tax regime?
What happens to the new tax regime we have opted for earlier
Earlier
years?
years and shifted back to old tax regime now? Do we still have a choice to opt for new tax regime? Is the question.
You have to again make the choice. You have to again make the choice in the current year, because by default it has gone back again to 115 BSE.
Any more questions? So we have concluded all question and answers. If any questions are there, we can just wait for 1 year, 1 minute. I guess no more questions, so we can conclude
Yeah,
the session. Thank you so much, sir, for the wonderful
yeah.
session on Section 115 BSc. And I thank all the inputs and insights you have given to all the attendees, especially because with the new amendments, there are a lot of confusion going on between old tax regime and new tax regime and all. So it was a very nice session. And I thank you for and behalf of KCA for accepting our invitation and making this session a great success. I also thank President of KCA, Pramod Srihari, and also our Chairman, Shri CA Deepak Chopra of Direct Tax Committee, and all the members involved in organizing this program, and also the participant and the technical team. Thank you once again, and I request all the participants to rejoin our again session at 5 p.m. today, presided by CA KG Acharya on budget income, business income, startups, and cooperative society. It will be a wonderful session with a short series conducted by same way by KCA like other session. Thank you all.
Thank you.
Thank you, sir.